The gains this morning led by the Hong Kong markets, which are up on your screen, 0.9% higher there.
SDFC says that the loans assigned is up 19% YOY, but down 2.8% quarter-on-quarter.
We still think we're heading into recession, and therefore we do think there's still another leg down from an equity market perspective.
Any of the activity you take which drives to growth of rural is doing well, including the farm cash flows are holding up pretty good.
The Nifty just holding on to that 18,230 mark.
The top 1 to 100 companies, the market cap cutoff this time around has come in at close to 48,900 crore.
Proud moment for all of us, and we carry out, and that's the DNA of our organization, of integrity, discipline, dedication and frugality.
We're down more than 100 points on the Nifty.
Securitization is an arrangement largely done between NBFC and banks.
The CERC committee yesterday in a ruling has gone ahead and ruled, and they have said that the company will now have to share 30% of mining profits from the Mundra PPA.
19,744 crores is going to be the total outlay for the green hydrogen mission.
18,074 currently for the Nifty. That was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar, and with me are Nigel and Mangalam. Good afternoon. The first 4 hours of the trading session were marked by a continuous slide in the markets. In the last 1 hour, we are attempting a bit of a recovery. The low on the Nifty was about 18,038. So from that level, we have recovered about 40 to 50 odd points. Let's see what the last 1 hour throws up. Again, in the last 5 minutes or 2 minutes of trade, you can see that not coming through. So things are getting a bit volatile for our markets. One key point to note is that today's low of 18,038 is lower than the lows that we had over the past 3 trading sessions. You almost got a sense that are we going to break down once again, but we're still back into that trading range with the recovery that we are seeing. A couple of stocks are pulling back right now, and they are in the IT space. So TCS, that's the high point of the day. So it's given up all its morning losses. It's now back in the green. And Tech Mahindra is another one. From the day's low, Tech Mahindra has seen a recovery of close to about 1.5%. And Maruti Suzuki is another one which is batting for the bulls. But there are so many heavyweights which are under pressure. HDFC Twins are lower. HDFC Bank is down close to about 1.5%. Reliance Industries, ITC, all these constitute about 20-25% on the Nifty, in terms of the Nifty contribution. And these stocks are severely under pressure, and that's exerting its influence.
Well, that's right. Reema, the Nifty Bank, that's the one really that can support it for the bulls. And if you look at it, earlier today, we went down to around 42,900 odd, and from there we saw a bit of a recovery. The 20 DMA is something that we were hovering at on the Nifty Bank just a short while back. So if we can hover around those levels, it's very, very crucial. Now just pull up the 2 levels. One is the day's low. The second one is the 20 DMA. The bulls would like a closer to around the 20 DMA. The problem is if we break today's low, then maybe we could slide down to the 50 DMA, which is at around 42,500 odd. So just keep an eye out on the Nifty Bank. That's going to be the crucial factor or the swing factor for the Nifty today. The Nifty, well, it appears we're in a broad range. And as we speak, we're closer to the lower end of the range. That's around 18,050 odd. Yesterday, we went twice around 18,250. Today, in the first hour of trade, we went around 18,240. And from there, we did see some selling. And that perfectly ties in with the options data. The 18,200 call, that's one of the most active strikes today. It's added close to around 90 lakh shares out there. So there is writing being seen out there and rather aggressively. So that's telling you 18,250. That's the mark that the bears want to fight like they've been doing yesterday as well as today. And the 18,100 call as well. So on a day basis, that 18,180 odd becomes very, very crucial going by that. On the downside, though, even though the markets are a little bit weakish today, the 18,100 put that continues to see a big open risk build up. So it's added more than 20 lakh shares out here. The premium out there is around 75 rupees. So if you just deduct that 75 rupees from around 18,100, that's telling you 18,030, 18,050, very, very crucial support zone, at least for a daily basis. And tomorrow we have that weekly expiry that plays out as well. So on the downside, 18,030, 18,050. On the upside, 18,250 odd. You got the goalposts for the market. Mangalam, what else?
Well, I'm looking at the mid-cap index, and the breadth of the market is weak. After 2 days of the market breadth being in favor of the advances, yesterday, though, we saw some narrowing out there. Today we have over 2,000 stocks which are declining for just about 830 which are advancing. We opened with the advances outnumbering the declines. Thereafter, the lines got closer. We saw an intersection, and now as we speak, the red and the green lines are actually at the furthest point from each other in today's trading session. And that is a bit of a worry, because so far in today's trading session, every time we got a bit of an up move, that has been sold into levels upwards of 18,100, closer to that 18,150 mark is something that is witnessing a fair amount of supply. So we'll watch out for that. And the only solace, however, we have is the way Brent is falling from highs of over $86 yesterday. Brent is now at around 80.66. So that is something we will monitor as we go ahead.
That's true, but on the flip side, dollar index too has surged to levels of 104.5. Last week, we were closer to 103.8. So that sort of is nullifying the benefit to risky assets like India. But let's tell our viewers what we've lined up on Closing Bell today. First up, we'll focus on Coal India and Yes Bank. Both stocks under pressure on the back of news flow. We'll also be joined by our market experts, Prakash Diwan and Mayuresh Joshi of William O'Neill, for a chat on several stocks from a fundamental point of view. And we'll discuss the outlook for the markets and top sectors, stocks to bet on, with our Alpha manager for the day, Ravi Dharamshi, Chief Investment Officer of ValueQuest Investment Advisors.
Well, how should you position yourself for the final hour of trade? Mitesh Thakkar is back with us. Mitesh, well, if you bought the opening, you'll be in trouble. But if you waited for the intraday dip, which we saw around that 18,030 odd, you'll be still in the money. What's your take? Do you believe that we're going to test lower levels, or do you believe that, in fact, we're closer to the lower end of the band? So maybe risk-reward could favor a buy. Your take on the index first.
Good afternoon. I think one, you wouldn't have bought the opening as, I think 18,250 in the last few days had become an important pivot, and unless until that was being crossed, it was no reason to buy the opening because it was just below that. And I think we are broadly in this range of about 18,000 to 18,250, and we are now heading towards the lower end of the range. So I still believe that we will possibly test 18,000. The worry will come in case we start breaking below 18,000. Then I think it will be a clear-cut opening up of a short trade, and that could turn slightly on the negative side. So because the overall trend is still negative, I think I will wait for this breakdown to happen, and then below 18,000 will be aggressively short. On the stock side, as I've been mentioning throughout the day, we've kind of looked at adding on to short exposure and exiting long exposure. So I have two sell calls right now. Deepak Nitrate is something which is broken down. So that's a sell with a stop just above levels of 1991 for targets of around 1900. And the other one is Gujarat Gas. That's also a stock which gave a pullback and is now getting sold into. So that's a sell with a stop just at about levels of 486, 487. And a target of around 465 on the downside.
Okay, thank you very much for that. Let's address the first stock which is on our radar, Coal India. Nigel, why is that?
Well, Coal India, they've gone ahead and announced that long-awaited wage hike. It's at around 19%, odd, and they're saying that it's effective from the middle of 2021. That's the calendar year 2021. This is not unexpected. It's on expected lines that we were working with a wage hike that's right to come about. And even the quantum is not a big surprise, according to me. 15 to around 20%, that's what most analysts were factoring in. So the impact is mostly in line. Now, if you look at it, the analysts, as is, they were factoring in a wage hike, in high teens. The other part of the puzzle is that there will be lower number of employees. So some part of the employee cost will be taken care of by lower number of employees itself. A very, very rough number. Some on the street expect mid-single digits to high single digits number of employees coming down in percentage terms, 5 to 9% reduction in terms of total number of employees. Coal India, as is, they were making some provisions. On a monthly basis, on a quarterly basis, they were making some kind of provisions for this particular wage hike. What is the way ahead from here on? As of now, it's being viewed as a negative. But one of those overhangs, it goes out of the way. Now all eyes will be on the FSA price increases, because the wage hikes have come about. Now, some part of that will be passed through by the FSA price increases. The only problem is we're getting into a pre-election year. So can the government of India, the central government, push through a price increase? That's a big question mark as of now. And as is e-auction prices, they are likely to see some pressure. Remember, they had already gone to elevated levels at highs that we have seen not in the last few quarters or so. So e-auction prices as is have come down a little bit. All eyes on the FSA price hikes and whether or not it can get pushed through. Prakash Diwan is with us. Prakash, I was just explaining to our viewers that long-awaited wage increase has come about. Now, all eyes on the FSA price increase. Can that come about or not? The stock was at around 250 rupees odd, the recent high. It's at around 217 rupees. What's your view on the stock from here on? The best behind, or still it's a value buy?
Good afternoon, Nigel. So I think given the fact that it's in a sweet spot, even energy requirements, a comeback on conventional energy, the kind of output increase they've done. And remember this wage hike, why, as you rightly, I think, explained, it's not out of turn or unexpected for the simple reason, especially the quantum, because this was linked to a lot of productivity norms that they have managed to attain very well. So this is only going to set the benchmark higher or set the bar higher for coal India to continue its production at elevated levels. And that's good news, so it has better margins, better revenue visibility. And I think from that perspective, this price erosion that you see, or this cut in the price that you see, given the softness in the market, is an opportunity for people who haven't yet participated in this theme to actually add to the portfolio. And this is going to be secularly long-term, Nigel. I mean, I think, you probably start seeing 250 plus zones at some point very easily once, a couple of good quarters are behind us. So it's not something which is which needs to kind of be people need to get worried about. The FSA also logically will start crystallizing and is going to be favorable for the company, is my hope. But even if that isn't, the overall business trend is so positive that I don't see any reason why this opportunity should be missed. I mean, I'm not saying you won't get softer levels or lower levels from here on. You could do that because it's a major component of the Nifty and of the market, and it could kind of see some sort of a sell-off. But you always like those opportunities to add to the portfolio rather than when it's on its way up or in a momentum of its own.
All right, Prakash, I'm just looking at a bunch of stocks which are doing well in an otherwise red-looking screen. We have Havells, which has moved to the high point of trade. Havells is doing well. IRB Infra is the other one. IRB Infra actually is up about 10% this week, and that's largely on account of the fact that today there is a board meeting to consider a stock split. But on Havells, what is your thought? Because recently, a brokerage met both the managements of Havells and Polycab and said while the first half of the fourth quarter is likely to be muted because of the star rating changes in fans, etc., the second half is where they believe that demand will normalize and inventory restocking will begin in anticipation of the summer, etc. Your thoughts on Havells and Polycab?
So, good afternoon. Yeah, you're right. Both these companies straddle a pocket which seems very promising. But, I'm seeing a very clear indication of softness in demand for all these products, particularly home improvement or home maintenance or home augmentation kind of, products, especially in tier 3 and rural markets. The reason is very simple. These companies actually used to get a bulk of their sales, incremental sales from there, particularly Havells. And, the other portfolio on the unitary cooling products hasn't really done well even now. So their reliance on fans has been more recent. The market leaders like Crompton and all have had a field day. And there are lots of newer brands which have come in, which, there are a couple of brands from the south which are invading the market in a significant way. So there is a little bit of competitive intensity that's also worrisome. So I wouldn't read too much into it in anticipation of this restocking, because even if they push volumes and inventories at the dealer level, how much of it actually translates into the P&L is going to be a little bit of a question. So a bit wary on that, to be honest. Polycab has, of course, a far more, a stronger piece in its cables and wires business, which will be absolutely correlated with new construction activity, to be honest. And that's something which you'll probably start seeing pick up in this quarter and all the way to probably May or June before the monsoon hits us. So for them, it's a far better mix of sorts. So out of the two, relatively, Polycab offers a more superior profile of earnings visibility and a bit of robustness, and it's got a strong balance sheet also to back that up. So I would put my money on that out of the two if I had to choose.
To stay on, Prakash, we want to talk about Yes Bank as well. That's in focus after it released its Q3 business update. Abhishek is here to tell us more. Abhishek?
Well, Reba, it's a mixed bag coming in from Yes Bank in terms of operational performance update that they have given. The deposit momentum is very strong, up about 15.9% YOY and 6.8% quarter-on-quarter. The CASA momentum has remained healthy and better than many peers. So it's grown at 14.2% YOY and about 3% sequentially. The decline in CASA ratio on a sequential basis is just 10 basis points to 29.93% when compared to 31.03%. So that's a good point over there. The loan growth, that's dismissal given the fact that it's grown below industry average, both YOY and quarter-on-quarter. So they have lost market share on the loan growth front. Advances are up 11.7% YOY and about 2.1% on a sequential basis. The liquidity coverage ratio, that's improved to about 119.5% when compared to 105% in the previous quarter. Back to you.
Thank you very much for that. Prakash, thoughts on Yes Bank and any other business updates from the financial space which stood out for you? Numbers were coming in from AU Small Finance Bank as well.
Yes, Reba. So, I mean, yeah, numbers, these bank updates is another additional metric that we started monitoring apart from cement and auto now. And today was a flurry of those, right? You had IndusInd and HDFC and, of course, Yes Bank. Now, the question with Yes is, all these last 6-9 months, they've actually been in a stage of repair. So from that perspective, you see that incremental change in the liquidity ratio, it's quite positive. That's what they had set out to achieve, and they have achieved that. If their advances haven't grown, it's understandable because their focus was more on, the ARC piece, the new lumpy investments that they are offloading from the book. So all that reset and repair has taken precedence. So I'm not really going to hold them very majorly responsible for any slippage or miss in the advanced growth. What's next for them? After the change that's happened on the balance sheet, are they able to go back to that credit growth cycle, which a lot of the other private sector banks are clocking? Is going to be the key question. So I would monitor that very quickly. Apart from the last quarter being a recovery season of sorts for some of these assets, which are very clearly looking like ripe enough to be restructured. So it's in a positive space. The only question is the stocks run up from that 14, 15, 16 zone to 20 plus, 21 plus in a little bit of a hurry. So it might consolidate, but once it does, you'll probably start taking it, in the same league as an IDFC First or maybe some of the other smaller private sector banks that are looking up. But PSU banks, don't lose sight of that. I think there's much more happening beneath the surface there. I'm not too sure which bank will actually head out to the finishing post earlier than the others, but some of the smaller ones like UCO and all have started smartening up quite a bit from what I hear from clients itself who are out to borrow, who have loan proposals getting done from some of these PSU banks, and the mood is very different out there as well towards growth. So, but the PSU ETFs are probably one of the best ways to play that, and there could be one big significant jump in the valuations for most of these PSU banks as well, and it's best to play along with an ETF rather than individual stocks at this point.
Oh, all right, Prakash. Well, by the way, the markets again are seeing some selling pressure. The metal index has moved to the low point of the day. Maruti has come off the high point of the day. So it's looking a little bit skittish. But from the broader markets, a couple of stocks are doing pretty well. Zen Technologies, that's one of the notable gainers. Big volume spike is what we have seen just in the last 30 minutes. That moves to the high point of the day. Cupid as well has moved higher. And TVS Electric, that's another stock that's locked in upper circuit with a gain of close to around 20%. So a few of these stocks moving well, but otherwise the markets are looking a little bit skittish. We're almost at the low point of the day, holding on to the day's low. Very, very important. 18,030, 18,040, just around 10 to around 20 points away from those levels. A little bit of a short break. You come back. We'll continue our chat with Prakash Sivan. Ravi Dharamshi, a Value Quest investment advisors, will also be joining in to give us his take on the markets for 2023. Don't go away. Well, it's got a little bit worse on the headline index then. We are approaching that 18,030 odd mark as we speak, and we're down 200 points on the Nifty. Volumes are very, very high. I think we're back to normal levels or even higher in the FNO market in particular. So it seems the FIs are back today. I'll watch out for the institutional number by the end of today. But one stock that's doing well actually from the broader markets is GNFC. Prakash, I wanted your view on this one. TDI prices, just tracking the globally tracked prices, they have moved higher. They're up by around 15% or thereabouts in the last 30 to around 40 days. Any view on the stock? GNFC, it has a tendency of making wild swings. It saw a sharp correction, But now it's
Yeah.
holding in the green while the remainder of the market is a little bit skittish. Go ahead.
So, I mean, today there's also an overall move towards the fertilizer names per se, and that's probably also adding to the momentum. But the stock has too many things that can go against you, and you won't even have any preparation or indication to manage that. Whether it's TDI prices or whether it's some of the other raw materials or the demand side for some of these products. It's far better to have a stable name like a GSFC, which is the other cousin of sorts, which probably is in the same space but has a much more broader base and a very good balance sheet with a lot of surplus cash on its books. So I prefer that. It's a bit boring, Nigel. It's not something which will give you great returns. But end of the day, what you need is also peace of mind along with your alpha that you generate. And that's where GSFC scores far better than the GNFC, which is much more cowboyish in its momentum play. On specifically on the fundamentals, there's lots of things that have improved in the last 2 quarters, which were not doing well in the first quarter when we started the year. But that's also kind of priced into the current price, so you really won't have much of upsides coming beyond this, is my view, unless something dramatically changes in their favor again very soon.
Thank you, Prakash, for joining in today. Have a wonderful evening. We need to move on and talk about some brokerage commentary on the outlook for various sectors which are coming in from. Let's start off on the view on the markets per se. Venugopal Garya, Bernstein, says they're overweight on financials and they stay overweight on IT. But they are allocating some weights to digital themes which appear to be more reasonable post the correction. They're also overweight on cement. They moved to an overweight on durables. They're underweight on utilities, metals and FMCG, and they're moving to an underweight on industrials as well. Venugopal Garya Bernstein says they're equal weight on auto. All right, our research team is also standing by. They're going to get us an outlook on various sectors. This is coming in from various different marquee brokerages. Abhishek is here to first tell us what CLSA has to say on banks.
Well, Rima, CLSA says that 2023 should be a strong year for the banking sector. So overall, they expect the peak ROEs to actually sustain in FY24. So Axis Bank is a preferred pick, followed by ICICI Bank as well as SBI. They say they have upgraded IndusInd Bank to buy from outperformance, and target price over there has been raised to 1,500 per share. They have downgraded the rating on Bank of Baroda due to the recent run-up that you have seen. It's been downgraded to outperform from buy. However, target price remains at 210 per share. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, from banks to tech, JP Morgan, they have written an interesting note on what they expect from IT going forward. Riva, tell us more.
Well, their thesis is that growth is going to slow down. So they're saying for the IT companies, growth rates were in mid-teens. In calendar year 2023 and calendar year 2024, growth rate is going to slow down to 6 to 8%. As growth rates slow down, they expect a valuation derating, right? We've already seen valuation correct, but they are still higher than the historical levels. So here, JP Morgan has put out the current valuations versus the pre-COVID average valuations, say 3 years prior. And you would see that valuations today are still about 30% higher than those levels. That makes them cautious in the sector. So they have no overweights, no buy ratings. They've got 4 neutral calls, Infosys, Persistent, Tech Mahindra and Emphasis, and they're underweight on TCS, LTI Mindtree, the newly merged IT company, HCL Tech, L&T Technology and Tata Elxsi. And, everywhere where they're underweight, which is on 6 of the stocks, the target price is lower than where the current market price is. So thesis is growth rates will slow down meaningfully and valuations will go back to the pre-COVID average valuation. So significant derating from here on, and this will play out over a period of time. So they're saying Q3 earnings miss you will attribute to higher furloughs. But in Q4 also when earnings come out weak, then in April and May when the companies start guiding for FY24, again when you start getting weak numbers and weak guidance, that's when the EPS estimates will start getting cut. So in the next 6 months, they expect this PE derating to be set in motion.
Okay, all right. JP doesn't believe it's yet time to get into IT names. Meanwhile, Jefferies, they're expecting operating leverage to continue to surprise for industrials this year. Vivek, tell us more.
Well, absolutely. So the one sector that I saw re-rating, in the last year on the back of a pickup as far as capex is concerned, mainly industrial capex and also capex as far as thermal power was concerned. So that particular sector was the industrials, mainly led by the cap good names. So Jefferies, continues to believe this year can be quite good as operating leverages, as you mentioned, kicks in. The segments that they believe will continue to give a strong ordering activity will be the power T&D, the railway segment, data centers, logistics, PLI and metals are the sub-segments on which they are more positive on. However, what they are cautioning against is the fact that any weak commentary coming in budget 2024 in terms of dropping capex would be a potential red flag. So they believe while ordering will remain strong, it could slow down from levels seen in the last 2 years. As far as the stock picks are concerned, L&T, Siemens and Thermax are their top picks.
Thank you very much for that. And Citi expects policy factors on city gas distributors and gas transporters in 2023. Mangalam is here to take us through the key excerpts from that note. Mangalam?
Well, a bunch of things as far as the OMCs are concerned. They believe that it will be policy and regulatory factors which will favor city gas distributors and gas transporters more than anyone else. And in that, the big driver next year would be, or rather the year 2023 would be the macro backdrop. They want to monitor how the revised APM prices and any change in allocation which is likely to happen, and as a result of which, they do have a bunch of ideas. For GAIL and Petronet in particular, they're watching out for the pipeline tariff review, KG gas auction in Jan itself, and crude price trends in general. They've initiated 2 pair trades for this year. The first one is overweight GAIL and underweight on Petronet LNG, and the second one is overweight BPCL and underweight IOC. So that's about the big calls from all the brokerages for 2023 on the markets as well as individual stocks. Let's get in market experts as well. We have with us Ravi Dharamshi, who's the Chief Investment Officer at ValueQuest Investment Advisors, joining us now. Ravi, thank you so much for joining in, and it's the first time we're speaking in this calendar year, so wish you and your team a very happy new year as well. At a time when you come, we have since...
and see your viewers as well.
Thank you for that. Well, at a time when you joined us, incidentally, we're seeing a steep sell-off in the market. 18,050 is where the Nifty is at right now, a 200-point cut. The one stock which is dragging the index, both the Nifty as well as the Nifty Bank, the indices, is HDFC Bank. It's currently at the low point of trade. It has been an underperformer over the last few months. Your thoughts on HDFC Bank after a spate of underperformance? If you believe that, there could be re-leveraging of corporate balance sheets going forward, do you think HDFC Bank stands a chance right now from a long-term standpoint?
See, overall, we are very bullish on financials. In fact, it is one of the only space where it is actually very clear that it's a very bullish space. We are behind in terms of NPA cycle. The credit growth is actually picking up and it's in early stage of revival. Cost of funds have not gone up as much in India. So the spreads are more or less maintained for most of the banks. There will be a little bit impact on the NIMs in 1 or 2 quarters, but I think that's manageable. I think HDFC Bank has been underperforming for the past 5 years, more because of other reasons rather than asset quality issues. It has been underperforming because of an exit of a stalwart leader, and then to add to that, there is an merger of a group company. So that is, we are still waiting to see what kind of synergies come out of it, how much of savings will happen. So, so those kind of things are holding back the stock more than the business cycle in the banking sector. So I would not be too worried about today's fall in HDFC Bank.
Ravi, how should we play IT now? I've never seen the street so divided on, the IT outlook. There are many believe we are in the last leg of a down cycle, and in the next 6 months, it's going to be an attractive entry opportunity for the IT names. But there's the other half of the camp which believes that we are going to be in for significant valuation derating, and there is a case for valuation multiples to go back to pre-COVID valuation multiples, which means a decline of 30% from current levels. Where do you stand, and what would be the markers that you are looking at?
Definitely closer to the latter camp than the former camp. We are also completely underweight, in fact, zero exposure to IT sector today, as of today. we believe that from a longer term perspective, this sector has matured and it is going to be a 10-12% grower. Surely there will be some winners emerging out of it. But currently, there are too many headwinds. The customer base is not doing well. There is for sure going to be a recession in US. Intensity and the extent is something that we can debate, but there is going to be a recession. And that will contract the multiple for the US tech companies as well as the Indian tech companies. And the attrition but it was more of the demand issue. I think there will be a lot of downgrades, and it's not only US. In fact, even the European geography is facing a lot of headwind. So I think there will be a lot of downgrade in this sector post this quarter result, where the management will come and say that the outlook is hazy, and mid-quarter they can actually revise it further downward. So we are staying away from IT sector. I don't know whether we will correct 20% or 30%, but we'll wait and see for another 1 or maybe 2 quarters before we start, getting constructive on this again.
Okay, all right. Not, too optimistic on IT, still a little bit cautious. Hi, Ravi. Wishing you, your team, your family a cracking 2023. Always good hearing your thoughts. Ravi,
Thank
last
you, Nigel.
year...
Wish you too a Happy New Year.
All right. Ravi, in 2022, numerous times when we chatted, these value-oriented stocks, some of them, PSUs, some of them dividend yield stocks, they took center stage and they surprised everybody, the big outperformers last year. Now, in 2023, are you expecting more of the same, or do you expect gradually that move from value towards growth stocks?
So I think 23 is going to be a tale of two halves, where the first half is more of the same, and the second half will be where we pivot away again towards growth stocks. So what I foresee what's going to happen is that currently world will continue to deteriorate. The fundamentals will continue to deteriorate. And in that deteriorating environment, India is likely to outperform and value growth is likely to outperform. Value is likely to outperform growth. But as Fed realizes that most of the, except for wages and jobs, which are the only two sticky points in inflation, everything else has started coming off. So sooner or later, Fed will pivot, and so they have already started slowing down the rate of hike. They will eventually pause and start cutting also towards the end, where I believe that the pain in the economy will start showing up so much that Fed will have no choice to cut. So basically, the path to Fed pivoting leads through a recession. So we have no choice but to go through a recession in US. So when the recession pain shows up, markets will mostly react negatively. But eventually, when Fed starts pivoting, I think that's where the support for the markets will come through. And at that point of time, again, one should pivot towards growth stocks rather than value stocks, is what I feel.
Right. I do see a couple of themes that you like. You do like some of the manufacturing names. You do like a bunch of companies which are OEMs, etc. One of them that stands out in the list is Keynes. It provides process engineering, integrated manufacturing, life cycle support to OEMs, etc. In this, what are your thoughts? I mean, in the OEM manufacturing space?
India is actually in a very sweet spot. So not only do we have a government that is supporting the manufacturing sector, we also have geopolitical realignment of supply chain in the world, which is leading to a lot of European and US customers demanding a second supplier, a second vendor, if not entirely replacing China. So we have pull and push factors working in our favor for the manufacturing sector. So the first set of companies which were given PLI incentives like mobile manufacturing, which is essentially an assembly operation, is already a success story. But the second set of companies, which is essentially the ecosystem around it, whether it is the components or the chips, eventually has to come to India if we have to make manufacturing really a big success story. So I believe that the rest of the ecosystem has started towards India. And without naming any company, I would say that electronic component manufacturing in India is going to pick up in a big way over the next 5 years. Yes, at this juncture, valuation might a little stretched from 1 year perspective, but I believe the growth trajectory is so strong over here that over the 4 or 5 year horizon, you will end up CAGR even from this, even if you end up buying at this point, from where you can see either a 6-12 months of underperformance or maybe 10% kind of a correction in the stock price.
Okay, all right. And one of those disclosed names that's already on the exchanges, that's up for you on the screen, Keynes Technology, as we all know. But Ravi, one other sector that did very, very well was defense. The central government's focus out there, there's a big push that we're seeing to defense companies, and they have done well. The question is, now is it a good entry opportunity for a longer-term investor, or do you believe you'll buy it only on a dip?
So clearly one round of re-rating has happened. See, the secular trend in defense manufacturing is here to stay. In my opinion, India has no choice but to become self-sufficient in production of defense equipment. So, and government has taken all the steps. And the last step, which was the most important step, was banning the import of about 400 odd items. And if there is not going to be import, then there is no choice left for the Army, Navy, and Air Force to actually start procuring this equipment locally. So that has started. So about 1 lakh 25 crore kind of equipment manufacturing, which used to be imported, will start getting manufactured domestically over the next 4 or 5 years. And that is a huge opportunity for the sector, which was very, very small. This sector is still in a very, very infancy phase. And at this point, it is only the public sector, government-owned companies that are actually capable and able to grab the opportunity. So I believe this story is definitely for the longer term. But as you mentioned, yes, there could be some consolidation. This might not be the best entry point. But again, as I'm saying, if you stretch your horizon to 3-4 years, I don't see an issue over here. I think the wealth creation over here is still pending.
Thank you very much, Ravi, for joining in. For the markets, we're at 18,050. The markets went down to levels of 18,020, but from there, it's managed to climb up close to about 20 odd points. There you can see that very mini bounce that we saw in the last 10 minutes. Still down 180 points on the Nifty, the sensex lower by 650 points. We had Mitesh earlier telling us that a break below 18,000 level, 18,200 level, 18,000 level opens the floodgates to lower levels, and that's where he would take a short position. So for now, we're holding still in that range, 18,050, but closer to the lower end. Some updates coming in on some order wins for GIPCL. Get into a break. On the other side, we'll get you a quick check on what dealing rooms are saying in our segment D Street Chatter. We'll also get you a few trading ideas from our technical experts. BTST calls up next.
Welcome back. You're watching us here on Closing Bell on CNBC-TV18, live from the CNBC-TV18 Motilal Oswal newsroom. For the markets, well, it is more of the same. We did see a bit of a sell-off, move towards the lower end of today's trading session. Then we're seeing a bit of a bounce from there, holding around that 18,065 mark for the Nifty. The Nifty Bank still holding on to that 43,000 zone. So good time to get in our D Street segment, D Street Chatter segment, where Nimesh gets us an insight. Nimesh, what are people really thinking? I mean, no trade really is working out.
And that's been the trend for the last couple of days, right? I've been saying for the last few days that it's a directional in this market. But technically today is the first day when the institutional activity is back. So the volumes have picked up. There is participation from larger FIs as well. But while the screen is down the Nifty is on 1%, the overall feedback is the FIs that are better buyers in select names. So it's not like they're aggressive sellers on day one of their joining again in the new year. So that's the overall feedback. What is surprising is, despite strong commentary and strong updates from the banking sector, that's the biggest loser in today's trade. That shows the kind of confidence or the kind of sentiment which is there in the market. The good news is getting sold into. That's something to read as far as the financials are concerned. Even then, within the financials, I believe for the second day running, there is a bit of institutional activity on the buy side in the insurance name. So looks like the money within the financials is flowing from the outperformers to the underperformers, and there is a bit of catch-up happening in the underperforming stocks within the financials as well. So that's something to track. The other big sector which is under pressure today is the metal names. So all the metal stocks largely has given up most of the last week's gains and are back to those levels from where the whole rally started. But surprisingly, if you look at the dollar index, that's sharply off the day's high. So that's technically positive for the metal stock. So that's something one needs to watch out for. But I guess in today's trade, it's largely profit booking in the metal names, since the fact that the institutional activity and the institutional participation is back after the week 10 days of off. So the key takeaway is, one, the institutional activity is picked up, the volumes are on the higher side, but it looks like it's still in a no trade zone, and we're going to be in this range between 17,800 and 18,300.
And how long before all the institutional activity comes back to full flow?
Looks like in a day or two. I think overall volumes have picked up in today's state. So maybe in a day or two. I guess that's not important. What will be key important is say mid-Jan, when the big allocation for emerging markets starts coming in, and that will impact not only China but for India flows as well. And that will be a big trigger for the Indian markets.
Take that point, Nimesh. Now, individual stocks. Let's get to that.
Okay, so in terms of individual names, the first stock on my list today is Shriram Finance. That stock is marginally under pressure today, but I believe there's going to be a large block deal very soon. And the indication is that a private equity investor is looking to sell in a large block. So that's something to track in Shriram Finance. So that's the first one. The second stock is Adani Ports. Even last week there were a couple of feedbacks that at these levels there is a bit of institutional activity on the buy side, and some funds are looking to buy. Even today there is a small market at close buy flow at a leading FI desk in Adani Ports. So that's the second one. The third stock is Max Financial. As I said, for the last couple of days there is a bit of buying interest back in the insurance names, and Max Financial stands out. It's been a big gainer as well in the last few days. But there is a big chatter of a big corporate development coming in very soon in Max Financial. So that's the third one. And the last stock is Sona BLW. Again, marginally under pressure today. Even there is a buzz or an indication that there could be a large block coming in Sona BLW as well. And that's the reason why that stock is marginally under pressure today.
Okay, all right, Nimesh, we'll keep an eye out on all of those stocks. Thanks so much for that. By the way, we have a cabinet meet outcome empowered group to be set up, and will include green hydrogen as well. So that's some important information that's coming in from that press conference. India will be the global hub for green hydrogen itself, and over 17,000 crores of incentives for electrolyzers and green hydrogen manufacturing in the country. So that's going to be a big theme that will play out in the next few years or so. But let's get back to the markets. Well, we are just managing to hold on to that 18,050 odd by the skin of our teeth. So let's keep an eye out on that mark at the end of today. Let's see if we can hold on to that. Mitesh Thakker is back with us. Mitesh, those bounces are getting sold into. What do you make of it right now? If you had a short position, will you carry it through?
See, I think carrying short position may not be a bad idea. A lot of stocks have broken down. The Nifty, I think, slightly is turning negative, and my sense that we actually have a higher risk of breaking below 18,000, then bouncing back to about 18,250. So we'll carry a short position, of course. Given the fact that we're still in range, it's not an aggressive position, but the bias is on the sell side, so the position is on the short side. In fact, on the BTST call side, I have both STBT calls rather. Infosys is something which is slightly turning negative, so keep a stop at 1505. Look for a 1480 kind of a target, and the other one is IRCTC. That's a conditional STBT. I want it to break below 633, which is today's low. I think that's the hourly pivot. If it breaks 632, go short with a stop at 636 for a target of 624, 622 for the call.
All right, Mitesh, thanks a lot for that. Meanwhile, just keep an eye out on a couple of these consumption names. Trent has moved to the low point of trade from the broader markets. Colgate too has seen a sharp slide. In fact, has moved to the low point of trade for that counter as well. And one of the stocks which is lower right now is Avenue Supermarts. It's actually down about 3.5%. Mayuresh Joshi joins in now, Head of Research at William O'Neill. Mayuresh, thank you so much for joining in. We're looking at Avenue Supermarts, a 25% jump in their third quarter revenues. Valuation-wise, the stock's never been cheap, but at 73, 74 times, maybe limited headroom for an up move out here. What do you think explains this down move that we're seeing on Avenue Supermarts today, despite a resilient third quarter update?
Afternoon, Mangalam. I think largely, if you probably look at the market construct itself, you're waiting for a follow-through day on the O'Neill lens, which is a move of 1.5% on the index itself, which should provide some element that the worst is probably over. However, we will also watch out for that 70,800 level, because if that breaches, you probably have further downside risk. Coming to Avenue Supermarts in general, I think the results specifically on the top line were largely gestated, Mangalam. The festive season this time around getting captured in the third quarter meant that the numbers on top line were expected to be very, very good. With a lot of stores swinging back in action, whether it be the mall stores or standalone stores as well, and all products or all departments working full throttle, the expectation was largely built in. The disappointment basically came in from two counts. One, in terms of the number of stores that have got opened. 4 new stores have got opened. I think the expectation was a little bit more that is expected to come through. And the second element is that with a lot of this pre-buying happening in the festive season, with what numbers are coming through, is urban and rural demand expected to come off, specifically when it comes to the non-food or the apparel part of the business for Avenue as well. So I think these two aspects is something that can take a hit, both in terms of how the margin profile will be and the bottom line. You're absolutely right. Valuations have always been very, very expensive for the stock. And therefore, I think both on the RS and the EPS rating of the only lens, it probably looks like a range-bound trade for Avenue Supermarket.
Okay, so high valuations and muted store count addition at just 4 in the quarter gone by has disappointed investors, and the stock has tumbled close to about 3.5% in trade. Did you have a look at the recently listed company, Radiant Cash Management? Very poor subscription, but subscribed only 53 times. The company then had to bring down the overall size of the IPO. Then the offer sailed through and even priced at the lower end of its range of 94 to 95. But, you know, after that kind of response, when the IPO was open, today it's done well. It opened up 17-18%. Now it's still holding up with a gain of 10%. Thoughts on Radiant Cash Management at current levels, and how would you compare it with its peer, CMS Info?
Afternoon, Rima. No, to a large extent, I think the subscription itself was very, very muted, as you rightly pointed out. And as the street probably was giving it more time in terms of having a high conviction in terms of translation of numbers probably happening over the next couple of quarters. Peer comparison, yes, but to a large extent, we would still wait out because on our O'Neill methodology, again, I think we do wait for an IPO base to probably take place. That might take a few days or a few weeks. I think if it fulfills our criteria for the IPO base over the next few days and weeks, we probably might have a look into that. But I've not, frankly, looked in great detail for the company itself. So I think we'll wait and watch.
All right. Hi, Mayuresh. Good afternoon. Mayuresh, what about APL Apollo Tubes? You know, we're getting some of these pipe makers who are joining in. As of now, they're saying that no slowdown whatsoever. In an otherwise, tricky market, APL Apollo Tubes is up close to around 3.5 to 4%. Any view on this space, and what do you think of APL Apollo Tubes?
So no, I think, afternoon, Nigel, I think generally the space is in very fine territory. Why I say that? Because the kind of structural improvements that we've seen in terms of construction, the structural steel that APL Apollo Tube has got, which can be used in varied applications from airports to hospitals to industrial complexes to building in commercial units as well. That in a very, very quick amount of time. I think that augurs well in terms of the overall volume growth in the next few years. Value-added services as a percentage of the overall top line and the product mix as well has significantly improved and is expected to go even higher. The third element obviously has been a lot of inventory that played out on previous quarters' numbers should start getting liquidated. I think that is at least what the management mentioned in their transcript in the quarter gone by. And as restocking starts taking place over the next quarter or two, you're expected to see volume growth normalize going forward. Now, the targets that they've probably kept over the next 2 years are very, very ambitious when it comes to top-line growth in terms of margin performance, which translates into operating leverage and obvious bottom-line growth that can come through. Should reflect effectively in terms of the EPS and RS ratings on our entire methodology. At the current juncture, I think the street would like to see how Q3 numbers basically play out. Is the liquidation of inventory largely done with? Second element in terms of input costs, which largely impacted their Q1, Q2 numbers. Being commodity consumers, as input costs start going down and as they restock in terms of their input materials as well, will we see accretion happening in margins and the commentary thereof from Q4 onwards? and how demand probably holds up in a slowing down situation globally and locally as well. This is something to be watched out for. So in my opinion, again, I think Q3 is going to be very, very critical. If the company is able to deliver, and the commentary probably is very, very positive surrounding all these aspects, my own sense is the momentum will then continue for a stock.
All right, Mayuresh, we are in a bit of a slippery slope right now. As we speak, the market's back at the low point of trade. We have the Nifty bang down 500 points. The Nifty also back around that 18,030 mark. Just moments ago, we were talking about how it is managing to hold on to that 18,050 odd mark. The sensex down 650 points. What we'll do is take a short break and come back, get you more market talk on the other side.
Yeah, Ajay, look at your dad. Will we be the same at his age?
Absolutely yes, if we plan our future like him.
How?
My father had invested in LIC's Jeevan Akshay, which gives immediate and guaranteed annuity at regular intervals, that too for life.
Wow. But do we have to wait until his age?
Absolutely not. We recently invested in LIC's new Jeevan Shanti, which gives deferred annuity, which means regular income after some years.
I see.
LIC.
LIC's annuity plans give 10 annuity options and flexibility in receiving regular income. LIC, हर पल आपके साथ.
टेंशन किस बात की? सेंचुरी MDF का लो एमिशन प्रीमियम प्लस है ना, हायर डेंसिटी है, वाटर रेजिस्टेंट भी है, यानी ये है जहां नो टेंशन वहां.
Low emission premium plus by Century ProWood.
Our success reflects your trust. Global business crosses rupees 20 lakh crore. Thank you customers, stakeholders and well-wishers. Canara Bank. Together we can.
उत्तरवीर कमाल दिखा अपना, कभी टेबल बन जाता है तो कभी अलमारी.
वीर MDF आम प्लाईवुड से ज्यादा मजबूत, ज्यादा किफायती, दिखे चकाचक, टिके टकाटक.
Well, as the decline for the market continues, let's keep an eye on a couple of stocks which are seeing further sell-off. Zomato is one of them. Zomato is actually down around 5% this, over and above the decline that we saw yesterday as well. Mayuresh is still with us. Mayuresh, have you tracked the developments at Zomato? 4 big exits taking place in just the last few months. The CTO, Gunjan Patidar, being the most recent resignation. Do you think this makes a difference, or would you still look at the company's metrics, etc., and the performance that they've done on December 31st, New Year's Eve, as a positive trajectory?
Yeah. So, Mangalam, I think the December performance was exemplary, and every December we probably hear out these same stories playing out. Huge number of orders, some orders not being able to be getting delivered, so on and so forth. But I think these high-level exits does not augur well in terms of how the management perspective is viewed as a corporate governance angle as well. The second element obviously is also how the street will probably like to view this in terms of the reported bottom line, ultimately playing out in terms of valuing this company on an earnings matrix as well. So to a large extent, does not augur well these top level exits. It is getting exhibited in the stock at this point of time. Better stories to play out in my opinion in the broader markets, Mangalam.
Okay, Mayuresh, thank you very much for that. It's 18,030 on the Nifty, a cut of 200 points. Sensex down 650 points. It's the global-facing sectors which have taken a bigger knock today. The Nifty Metal Index is down 2.2%, and IT2 dragged its feet. Pull up the Nifty IT Index and you would see pressure. And on the Nifty PSU Banking Index, which is down close to about 2%, it was just a reversal of the strength that we had seen over the last many months. So today, the Nifty PSU Banking stocks came under pressure, despite many of them reporting very strong loan growth.
Well, it was a full house today, Rima, in terms of volumes, and doesn't appear to be the best case, right? Because the Nifty was under some pressure. The breadth of the market as well was in favor of the declines after seeing a couple of good sessions with regard to the advanced decline ratio. So, that isn't very great news. And just take a look at it. Some of those mid-cap stocks, they're ending virtually at the low point of the day. GSPL, that's one of the last stocks, and it was holding well in the green. Now it's moved to the low point of the day. Petronet LNG as well. A couple of these names should come up for you on the screen. And Federal Bank as well. Everyone's been talking about the banking updates that have been looking good. Well, some of these stocks have taken a bit of a nod. Just take a look at that. Some of those frontline F&O stocks have taken a nod. Godrej Consumer, by the way, that stock as well has slipped a little bit more in the last few minutes. So difficult to find too many winners. Towards the end of trade, we're going to be ending closer to the low point of the day as we speak. Very, very few winners is what we can see. And from the Nifty pack itself, those bounces did get sold into in today's trading session. Cipla, by the way, has taken a bit of a knock. And all that optimism about metal stocks, well, they have got sold into Hindalco at the low point of the day. Well, Mangalam, not a great trading session.
It was, it was a down day. I mean, there's no two ways about it. 200-point downtick is what we saw on the Nifty. The sensex is down almost 650 points. We saw a cut of almost 450 points on the Nifty Bank as well. Key technical levels were broken on the Nifty Bank. The Nifty as well was lower than, the lower estimated range for the market. So 18,050 to 18,100 is where we thought there could be some sort of support. But the interesting part in today's trading session, and an important part of that, was that every time we saw an attempted bounce back, that was sold into more vociferously. And as we speak, we are ending at the low point of trade. So let's recap trade then. Today was a weak day of trade, 200 points lower on the Nifty, 1% lower. And in doing so, the Nifty has erased all the gains that it saw in the last couple of trading sessions, has ended in the negative for the week itself. The stocks that led the Nifty lower, it was a cocktail of heavyweights. We had Reliance, which ended at the low point of trade. We had HDFC Bank, which ended at the low point of trade, down about 1.5%. ITC was the other one, which was down about 1.5%. The metal stocks continued to decline from last afternoon. So Tata Steel ending virtually at the low point of trade with a cut of almost 2.5%. And then we had a decline coming from the IT pack as well. Infosys was down about 2%. TCS just about closing in flat terrain. On the Nifty itself, we saw over 40 stocks end in red terrain, just around 18,030 for the Nifty. The broader markets, however, they bore the brunt a lot more. Over 2,000 stocks declining for just about 800 stocks advancing, Nigel.
Well, let me find a few of those stocks which advanced today. One of them was Radiant Cash Management, which made its debut in Dalal Street, ends with a gain of close to about 12%. Punjab and Sindh Bank, PSP Bank as it's called, was up 2%. Very strong business update. Railtel, which won an order worth 186 crore, managed to close up in the green. Angel One, not a quarter update, but the December month update, where the gross additions were very strong at 3.3 lakh, higher than what they had in the prior month. So that stock was higher in trade. On the losing side, DMart was a big drag. It fell on large volume, 3.5% lower. The store count addition at 4 disappointed the street. And Indigo, right? You would have thought that passenger numbers in the month of December would have excited the street, but no.
Well, that's sort of a day, Rima. Most of the good news got sold into, whether it was with regard to the operational updates. Vedanta's, operational update as well wasn't too bad. But the problem is the recession fears gripped the markets yet again. And that's where Vedanta as well ended with a bit of a downtick. I think across sectors, whether it was with regard to the banking names, whether it's with regard to Avenue Supermarts, Vedanta, Interglobe Aviation, all those names, they got clonked back in today's trading session. To highlight a few winners, that we saw in trade today, very few of their BF investments. Well, Mangalam had highlighted that today. There's going to be taking up a voluntary delisting, so that one managed to end with some gains. And you had Havells, well, that one bucked the trend with a gain of close to around 2%, while JNFC as well. TDI prices have been moving up, and it seems the street gave a thumbs up to that, so that stock as well ended high with a gain of around 2% odd.
Okay, so tonight from the US markets, we will get the minutes of the last FOMC decision. That's for the month of December. So that's going to be crucially tracked, and plus the ISM manufacturing data. Will the US markets continue to remain under pressure? Crucial session coming up. But for now, it's a wrap on Closing Bell. It's been a disappointing session for our markets. Key indices down 1%. Get into a break. On the other side, our special show, Winning Mindset, the CEO Guidebook. We will speak with TV Narendran, the MD and CEO of Tata Steel. Stay tuned.